Thank you, everyone. Good evening, everyone. Thank you for joining today's webinar. It's my pleasure to actually be here today, right, with the invitation coming from Fund Supermarket, right, to share with everyone, I think, a topic that is very close to our heart, right, that is talking about retirement, right? And the topic we are going to share is that I'm going to go through a little bit, right, on the overall, the agenda, right, what I'm going to spend the next 40 minutes, right, to cover. Okay. I will briefly share with everyone, right, what is the concept of retirement, right, and how we can actually plan to ensure that we can have a quality, right, lifestyle post-retirement, right, and followed by I'm going to share some of the investment scheme that we think that is specifically designed, right, for the retirement planning that is very suitable for you, right, and the third, I'm going to go through with you some of the investment solutions, right, that is offering by RHB at this point in time. Okay, so when I talk about retirement, right, a lot of customers and my friends, right, they will always think that retirement is actually very big words, right? I would rather put it in a way that I think retirement is a word that is very close to our heart. I think all of us, especially for those of you that is actually working like me, right, we actually look forward to our retirement because we all think that when we retire, right, that is the time that we can actually have more time, right, to do whatever thing that we actually plan to do. We will actually have more time to enjoy the kind of lifestyle that we want, right? And that is also the time that, right, we can fully utilize the time that we don't have at the moment because we are working, right, to do whatever that we want to do. Okay, but again, reality actually kick in. I think one of the very big considerations to actually think about retirement is that when we start to retire, it also means that we will not have income, right? And if we don't have income, how are we going to make sure that whatever we have by the retirement time is enough for us to actually sustain, right, for the remaining of our life up to the day that we actually say bye-bye to the world? Right? And for most of the people, especially for Malaysian, right, we actually notice that EPF saving may be the only retirement plan that they have, right? And assume we actually retire at the age of 60, right? Of course, a lot of us, we want to retire earlier, right? But just take a general assumptions that 60 years old, we retired, and average lifespan, let's say we live up to 80 years old, then we will have another 20 years to live. Right? So how do we make sure that we actually have sufficient money, right, to sustain whatever lifestyle that we have? Not to mention a lot of us actually dream about a very quality, right, life that we want to have after our retirement. And for Malaysian, right, there's actually a survey that have done, right, especially after we went through the pandemic over the last 2 years, right, what are the biggest financial worries a lot of general public have today? Right? And it came out with these 3 answers, right? First, unexpected medical expenses, right? Second, rising monthly expenses, right? I think as much that a lot of us can actually feel that especially over the last 2 years, right? Inflations have been actually much higher as what the announced number that we all have, right? Especially with the lower interest rate, right? It even escalates further, right? The inflations that we actually feel on our daily life. Right? And the third thing, right, which is very appealing, a lot of us actually don't have enough retirement savings. Okay, and these 3 things are very, very close to retirement, right? As much as we all know that as we actually get older, okay, one thing that we really want to avoid is paying actually medical expenses. But in reality is that as we get older, right, there will be more sickness that kick in and there will be more medical expenses that actually involve. Okay, and we all have to take care of inflations. We also have to check that whatever saving that we have today, after you taking care of the inflation factors, right, whether the actual money that you're able to spend after retirement, right, is able to sustain your life long enough or not. Okay, and data has shown that a lot of people have actually worried that they don't have sufficient saving at this point in time for their retirement, right? And this especially happened that a lot of especially people who are actually doing their own business, they're self-employed, right? And they're freelancers, right? Those people don't, they are not like me, right? Because we are working, we have EPF contribution. They don't have EPF contributions, right? And a lot of them actually don't have a fixed retirement saving. Okay. And if you follow the latest announcement or newspapers, right, you can actually see that this is actually quite worrying, right? Our MP have actually pointed out, right, a lot of members actually have less than 10,000, right, in their EPF account. And according to this article by Asia Asset Management, right, 80% of the EPF members, right, those who are contributing to the EPF actually don't have, right, more than 200,000 in their account when they reach, right, 1 year before their 55 retirement age. Okay, and this is less than the minimum 240,000, I would say minimum saving that is set by EPF, right, to at least able to sustain your retirement life. So this is again very worrying, I think, for Malaysia. That is why government actually back a few years ago have actually introduced some of the scheme to encourage our general public, right, to actually save more for the retirements. Okay, and when it comes to retirements, right, how much we really have to save, that is only enough to sustain our lifestyle post-retirement. I would say this is very, very subject to individual, right? Because all of us actually have a different consumption pattern, okay? And that lead to a different retirement plan and also the retirement amount that we need to set aside, right? For example, if I say you have a plan that currently you are living in KL, right? But after retirement, you probably plan to move back, right, to a smaller kampong or the rural area, right, which you have a more simple lifestyle, right, that will probably require lower amount to sustain your retirement, right? But if you still want to have a very quality kind of lifestyle after your retirement, for example, now every one of us have a car, right? We still can commute around, but after your retirement, does it mean that you don't need a car? You still need a car, right? So if you still want to continue to own the car, to buy a car, right, the car monthly payment, the car maintenance fee will cost us a lot, right? And if you want to maintain your current lifestyle that you're able to enjoy, let's say luxury dining or a good food, right? Or at least the basic thing like the gadgets, right, the electronic goods that you're enjoying now. And a lot of us like me, I like traveling, right? So we always say that after retirement, I want to go travel around the world, right? So how are you able to ensure that you have enough to fund your traveling costs? And how much is actually enough for all of us, right? So we have actually done a very, very simple, right, analysis to actually get, to actually come up with these 3 simple questions that we all have to ask ourselves, right? How much you actually need to have a comfortable lifestyle, right, post-retirement in Malaysia, okay? And how many years of retirement fund you actually need to plan, okay? Like what I mentioned just now, generally we assume we work up to 60 years old, right? And we live up to 80 years old. So you will have to plan for minimum like 20 years, right? So that will be the general consensus that we are looking at, right? And what are your monthly retirement expenses, right? Currently, I think this is actually also very individual, right? Some people may actually need like 3,000, right, to sustain their lifestyle. Some people may need 5, some people may need 10, some people may need 15, right? But general consensus that we do encourage at least to budget, right, for the half of the salary that you are last earning, right? And third, do you actually have enough saving, right, for your future expenses? Okay, so I'm going to show you some calculations, right? And this calculation, actually, if you go online, right, there's a lot of financial calculators you can actually use, right, to derive to the number. Okay, just assume that we retire 60 years old, like what I mentioned, we are going to live up to another 20 years, right? The minimum retirement expenses that is required, assuming, right, your monthly expenses is 5,000, right? And 1 year, the total yearly retirement expenses is 60,000 times 12, 5 times 12, so it's 60,000. And inflation rate is 3%. Okay, to sustain your 20 years of retirement life, you need to have 1.7 million in your account, right, during your retirement. And assuming you want a better lifestyle, right, like what I mentioned just now, you want to go travel, right, you want to be able to own a car, you want to be able to actually enjoy whatever you are enjoying before your retirement, right, and assume that you require a higher expenses, that is 10,000 per month, right? And yearly expenses is 120,000. And taking into consideration that inflation rate is 3%, right? You will need to set aside 3.3 million, right, at the point of retirement. Okay, and this will actually go on, right? So and so, you can actually use this, right, to do a simple calculation by actually dividing or multiplying the number, or you can actually go to the, I would say, the internet. There's multiple calculators that you can actually use to derive to your individual numbers, right? And after you have these numbers, right, look at the current saving that you have, being your EPF, right, being your all other form of saving. Okay, and looking at your current saving rate, right, do a calculations whether this will actually help you to achieve whatever financial objective as to the number that's set up here that you will need at the point of retirement, right? If right, if it's not sufficient, then you will have to adjust, I would say, your financial planning accordingly. So it's either you will have to make sure that you save more, right? Or it's either you have to make sure that your money actually work harder for you, right? So when we come to say we have to save more, right? So how much we really have to save? And it all again very depends on individual. What is the amount you want to achieve, right? If you can save half, I would say good, right? Be it, we save the half, right? Because we all have to remember that when we have the income, we have the ability to save. Right, but it doesn't mean that the income will be actually there forever. I think through this pandemic, we actually see that a lot of people are losing their job, right? And they have no income, right? As much as we want to assume that we work up to 60 years old, we always constantly, we will actually have income, we will have money that go into our EPF account, but reality is not like that, right? So as much as when you are young, right, as much as you can save, how much, right, that you can save, please do it when you have the ability to do it, right? But if you are not, right, as a simple guidance, we always encourage our friends, right, to have minimum, right, 1/3 of your monthly salary, right, as a form of saving for your retirement. So you may actually say that, wow, 1/3 of my salary, that seems to be a very big number, right? I think I would want to share with you that it's actually not that difficult to achieve, right? Because remember, most of us, if we are actually white collar, we are actually working, we do have EPF contributions, right? So based on the mandatory EPF contribution rate, right, around 23% already go into your EPF account. Right, so on top of that, what you have to do is that you have to save additional 10% from your take-home pay. I would say that this is the basic we always encourage people to do. Whatever go to your tax, whatever go to your EPF, right, treat it as non-existent. But whatever actual money, actual pay that you take home, please do save a minimum 10%. Right, and by doing that, right, combined with the EPF contribution that you have, right, without you realizing or without you realizing, in actual fact, yeah, you are saving close to 1/3 of the monthly salary that you have to prepare for your retirement. Okay, and like what I mentioned just now, amount is ultimately one thing that determine how much, right, or how soon we can actually achieve our financial objective. Right, and the other factors that is playing a very, very important role is the return we can actually get from the saving, right, or from the contributions towards the retirement planning that we have. Right, so returns play a very important role. Why? If you look at this table, right, you can see it very, very clear. Assuming, right, this now you are actually 30 years old. Okay, after today's talk, finally you realize that, right, you have to start your retirement planning, Okay? And if you're 30 years old, I will say congratulations, it's not too late. You still have a plenty of time to actually plan, right? Assuming you are retiring at 60 years old. So you have the next 30 years to save, right? And to make sure that your money can continue to work for you. Okay? And whatever returns that you can actually have, right, on your saving, it play a very big role to determine ultimately how much you can actually have, right, when come to your actual retirement time. So you can see from this table, assuming, right, each month you have the ability to save 1,000. Yeah, and you're a little bit conservative. You don't want to take much risk, right? And you save everything in FD. Okay? And currently FD is giving a rate around 2%. Okay? And if you're doing this for the next 30 years, when you come to the retirement, right, you have 493,000 that is available, right, for you to sustain on your retirement spending. Okay? Assuming you can take a little bit more risk, right, you invest a little bit in more conservative asset classes, right, for example, fixed income, that can improve your return to the rate of like 4 to 5%. Just take 4% as the assumption, right? So if you're able to get an annualized return rate of 4%, right, by saving 1,000 per month for the next 30 years, come to the retirement time, you will have 696,000. Right? But if you manage your investment very well, right, and you're able to achieve an average return throughout the next 30 years of 8%, okay, by saving the same 1,000 per month for the next 30 years at a return rate of 8%, right, you can actually have 1.5 million at that point of retirement, right? So that's what I actually mentioned just now, why return rate play a very, very important role, right? If you can actually save a lot more, right? And if you're a little bit, I would say, risk averse, you don't want to take much risk, you will have to ensure that you save more to achieve the number. But if you are not able to do so, perhaps you want to go through some of the retirement that able to, some of the investment that able to give you a better rate of returns, right? To help you to achieve a better financial growth, right, for your retirement. So 1.5 million, right, as compared to 493,000 is very, very big difference. Okay, so times is a very important factor. You have to start early, right? Second, return rates is also very, very important, right? You have to ensure that you are generating, I would say, a lot more reasonable return over time, right? Taking consideration of the risk that you can actually take, right? And third, you have to be very disciplined to actually plan for this retirement goal, right? Without discipline, a lot of us are not able to achieve that, right? Because there will be a lot of things in this world that is going to distract, right, our attention. This example, like myself, I like shopping, okay? And I have a loose finger, right? So if I don't actually discipline myself by having a very, very routine approach, right, to manage this amount of money for my retirement planning, I will not able to achieve so. Okay, so I think these are the three very key important message I want to share with everyone when coming to retirement planning. First, you have to plan, right? Second, you have to make sure that you have the sufficient amount to plan, right? And third, you have to manage in the way that to make sure your money works for you, right? And very important factors I want to re-emphasize again, discipline must be there, right? But if you are the one that you think you may not really have that much of discipline, right? You probably need something to encourage you, right? So we actually have a very interesting scheme that is introduced by our regulator, right? All the way back in 2012. That is actually called private retirement scheme, right? So this private retirement scheme, how it works is actually quite similar to EPF. Okay, so it's a scheme that dedicated for retirement planning, right? But EPF, whatever you contribute into the EPF, right, is managed by EPF. It's managed by the government and the fund managers there, right? But this private retirement scheme is basically managed by the approved PRS provider, right? Which are the major asset management companies in town. So there's total 8 approved provider, in which RHB Asset Management, right, where I'm actually coming from, is one of the approved provider. Right. And this PRS scheme, right, is currently, I would say, administrated, right, by PPA as an administrator, private pension administrator, and the whole scheme is actually governed by security commissions. Right. And it generally available as, I would say, as a format of fund, right? That is very similar to your unit trust fund, right? With the exception that there is certain fixed structure that we have to follow. So that's why I mentioned just now, this is something that very suitable, right, for you for retirement planning, because this is a very disciplined approach. Disciplined approach as such that any of the Malaysians, so long as you're 18 years old and above, right, you can actually contribute additional saving towards the private retirement scheme, or in short, we call it PRS. Right? But how it is designed, right, is very similar to your EPF. So remember EPF, we also have the account 1 and account 2. So for PRS, right, it's the same thing, right? We have a sub-account A and sub-account B. And whatever contribution that actually go into your account, right, intend to keep there until you reach your retirement age of 55. Okay, so for all the remaining balance that is actually in account 1, right? No withdrawal is actually allowed, right? The withdrawal will only kick in, right? Unfortunately, when we say bye-bye to the world, right? Or there is a permanent departure from Malaysia, right? Or with or in the event, right? Anyone suffer total and permanent disability, right? Or on the serious disease or the mental disability, then we can actually withdraw it out from the sub-account A, okay? But for the sub-account B, right, whatever balance that is in the sub-account B, you are actually allowed to withdraw after the first year of your initial investment, right? And thereafter, once a year, right, there will be a penalty of 8% that is actually kicked in, right, on the amount you withdraw from the sub-account B, okay? But there is also an exception, right? If you need it for the housing and also for the healthcare purpose, you're actually allowed to withdraw with a 0 tax penalty. So you may actually ask us why this 8%, right, tax penalty actually kick in. Because currently, when you're investing in PRS, right, the government actually give you back a tax relief, right, of up to 3,000 per annum, and currently is approved up to year 2025. So from now onward, up all the way up to year 2025, and for the past many years, right, government have been giving this incentive, right? So if you're paying tax, okay, and if you're investing in PRS, whatever amount, okay, that you are investing in PRS up to 3,000, you actually have the tax deduction. So it's subject to your individual tax rate. For example, if let's say your individual tax rate is 10%, right, you actually have the 300 tax saving. If your individual tax rate, right, is actually 20%, you actually have a 600 saving solely from the tax purpose. Right, and because the whole scheme is designed for retirement purpose, generally, we want to really encourage you to keep the money there, right, for retirement, and not to just withdraw it for other purpose, right? So that is why government is giving you this tax incentive, but at the same time, in the event if you need to withdraw the money out from the sub-account B, right, you can still do so, right? But it's just that you have to pay back the 8% tax penalty. Okay, and this was in the way is being compensated by the tax relief that you have enjoyed in the earlier year. And in terms of the contribution amount, right, it comes from a very, very small amount, right? We very often that we came across that a lot of our young friends, right, when they just first start work, they would think that if you ask them to set aside a very big amount for saving, it may be difficult for them, right? So in this case for PRS, it's very affordable. Right, as low as minimum 100, you can actually start your investment. Okay, and as per what I mentioned just now, this PRS basically is to promote disciplined saving. Right, disciplined saving, just like your EPF saving, is meant for long term. Is meant for your retirement. I'm 40 plus now, right? I would say I have been working like for the past 20 years, right? If you ask me, hey, up until today, right, what is the one thing that I really glad, right? I think for those of us that is working in Malaysia that we have as compared to some other countries is really that we have a quite a good pension fund system, but which is EPF, right? And if you're working for the last 10 and 20 years, right, you probably realize that without you realizing, right, but every month actually contributing your money into EPF, right? 10, 20 years later, when you look back into your EPF balance, right, you will surprise yourself that there's actually a very big amount of money, right, that is sitting there. Hey, that you never thought you have that kind of balance. I think for PRS, you generally have to work the same. You have to treat it that this is really saving for your retirement, right? And we have to have a very disciplined approach just to set aside the money and let it work for you over time so that you can achieve whatever retirement objective that you want to achieve. Okay? And last, the contribution is actually very flexible. So you can contribute to PRS anytime. Right? If you want to do it on monthly basis, you can. You want to do it on yearly basis, you can, or any of the interval that you can actually determine on your own. Okay. And come to employer, if any one of you, right, that is running a business, right, you do have a staff. If you want to have additional saving for them on top of the EPF that you're contributing for them, right, you can also use PRS as a vehicle to help for your staff retention, right, to help your staff to actually have additional benefit, right, in terms of their retirement planning, and whatever additional amount that you are contributing on top of the EPF, right, up to a total of 19%, right, you will actually have the tax relief as well, so that the unutilized tax entitlement of 7%, you can actually use it for PRS. So when it comes to RHB, asset management, that what I mentioned just now, we are one of the PRS provider. Right, so for RHB asset management at this point in time, right, we actually in total have 6 PRS series fund, right? So we have our core PRS offering, right, that cover across our PRS growth fund, moderate fund, and conservative fund, right? We also have our non-core offerings, right? And this non-core offering at the moment are mostly Sharia compliance fund. Then we have our Islamic equity fund, Islamic balance fund, and also our newly launched allocator fund. Right. The main difference between the core and non-core PRS offering are basically if you select, right, to invest in PRS and you go into the core fund, right? If you don't really determine like which of the funds you want to invest, they will allocate according to your age. That's what we call default option, right? For example, if let's say today you are 30 years old, right? So you are below the age of 45, right? By selecting the default option, it will auto allocate you to growth fund, right? Because you are young, you still have a lot of time leading to your retirement. You can afford to take a little bit of risk. So it will allocate into a growth fund that have more allocation into equity, right? With the anticipation that over time, it can generate a better returns to actually grow your investment, right? And when you reach the age of 45 years old, okay, then your allocation will automatically shift from the growth fund to the moderate fund. Okay, and this is actually more balanced portfolio with the allocations that are in both equity and fixed income, right? So this will actually give you a balance of income and growth, right? But as you actually approach your retirement age, when you come to age 55, this allocation will again move automatically, right, to conservative fund, right, which have a more allocation into fixed income. Because when you're reaching your retirement age of 55, right, you need your money. That's where you need to withdraw, right, from your retirement funding to fund your retirement. So this point in time, you probably don't want to take much risk. So the asset allocation will actually move into conservative, which is more focused on income generating, right, to help you to fund your retirement. But if you choose not to go for the core option, right, you want to go for the non-core option, you can actually determine on which of the funds you actually want, right, to invest in based on some of the research analysis or also the returns or the performance that you actually have done on your own, or probably with a consultation coming from, let's say, Fund Supermarket, right, and also from any of the sales people that you're actually dealing with. So today, I would like to spend another 5 minutes, right, in specific to introduce a new PRS solutions that we have just launched last month, right, into the market. That is our PRS series I Allocator Fund. Right, so this is actually a Sharia compliance fund of funds. And if you look at in terms of the key features for the funds, right, it basically invests in the pool of, I would say, funds that RHB Asset Management have managed, right, in the past few years. And these are the pool of funds that have established a very good track record, right? And this pool of funds that I'm going to share with you, right, they are basically giving you a very diversification exposure, right? Because some of the funds are actually investing in global markets, right? Some of the funds investing in Asia, some of the funds invest in China, right? Some of the fund invest in, I would say, a more thematic trend that we are seeing, right? And we also have a very good mix in terms of asset allocations, right? With a balance coming from both growth, right, on the equity, and also the income that is actually coming from the fixed income investment. Right, so we can invest both in equity and we can invest both in fixed income, right, through our exposure on the underlying fund. And this is also a Sharia compliance fund. I think for some of our especially Muslim colleagues here that is preferring Sharia compliance fund, right, this will be one of the considerations for you. Okay. And if you look at in terms of the funds that we are feeding in, right, for this I allocator, right, we have funds like I mentioned just now that is investing in the global markets, right? That covering like mainly like US and Europe through our Islamic Global Development Market Funds, right? Then we have funds, we have also, we are also investing, right, in fund like iGlobal Sustainable Disruptor Fund. This is also a global fund, but it focuses on the new mega trend, right? The disruptive theme that we are seeing around the world, for example, technology, right? For example, new energy, right? For example, all the new evolving, right, consumer trend that we are seeing. So this fund will have exposure in all those stocks. And we also have the Global Sharia Dynamic Income Fund, right? This is more on the income focus. We are investing in both dividend equities, but also on the fixed income, right? Again, this is also a global exposure, right? And come to closer to home, right? This part of Asia, right? We have Sharia Asia ex-Japan Growth Fund. Right, this is actually an Asia equity fund, and we have Sharia China Focus Fund. Right, this is actually a China equity fund that invests mainly in the China Asia markets. Right, and come to the ASEAN, we do have. We can also consider, right, South ASEAN. Now we start to see like more opening, right, in this part of the world. Right, we do think that I think ASEAN have actually been lacking in the past, right? If we think that there's a chance that it will actually perform better in time to come, we can also allocate into our Islamic ASEAN Mega Trend Fund, right? And come to the fixed income side, we actually have two selections under this fund of funds, right? That is our Suko Dana Shamil and also our Global Suko Fund, right? So the fund managers will primarily invest, right, all the monies that you put into the allocator funds, right, through this pool of funds that I have mentioned just now. And if you look at the ideal asset allocation at this point in time, we will allocate like 50 to 80% in equities. We will have 15 to 14%, right, the range for fixed income, and we are holding 5% cash. So this asset allocation, you can see, is a range that we will actually adjust according to the market conditions, right? Shall we think that equity will continue to outperform? We will have put more into equity, right? And if we think that we have to move a little bit conservative, right, for the downside, I would say management, then we will allocate more into the fixed income by adjusting the asset allocation into the indicative model portfolio. Right, so if you look at this chart that I'm sharing now, so this is an indicative asset allocation that we are putting into all the funds that I mentioned just now, right? And if you look at the performance for each of these funds, right, I just want to say that we have put forward all the best Islamic offerings that RHB Asset Management have, right, that come together into this iAllocator fund. Right, for example, the iGlobal Sustainable Disruptor Funds, we just launched beginning of this year, which is January 2021, right? And on the year-to-date basis, right, it has generated a return of 18%. Right? And if you look at like Islamic Global Development Market Funds, But so this is a global developed equity funds, right? Since launch, it has delivered a return of 82%, right? On the 3 years basis, is 48%. And last 1 year itself, it also had delivered a return of 24%. Right, and Shareholder Dynamic Income Fund, despite it's a more balanced, more income-focused approach, but since we launched the fund, it also has delivered 14.8%, and last 1 year return is 13%. Right, Global Sukuk Fund, this is actually a bond fund that is more conservative, but despite, right, on the 5 years average base, on the 4 years plus less than 5 years, right, on the average basis, right, it has delivered about 5% per annum with a since launch return of 22%. And last 3 years, it has delivered a return of 19%. And this year is slightly lagged a bit, right? But it still generated a positive of 2.83 as compared to a lot of other global bond fund or Asia bond fund, right? That you're seeing that some of them even deliver negative return for this year, right? Due to like what is actually happening on the rising interest rate concern, right? Also on the pricing concern on the default that is happening on China lately, right? And if you look at in terms of the Asia ex-Japan Growth Fund, right, on the since launch basis, we have delivered 31, 3 years is 32%, and last 1 year it has delivered a return of 19%. And the Sharia China focus, since launch return is 103%, and we only launched this month is about 3 years ago, and we are annualized return of 25%. Right, so we do think that I think for some of you that is actually consider PRS investment, right, for a long-term planning, and probably currently you may be actually holding other PRS funds with other providers or even with us, right? I think what is currently having in the market a lot is actually quite focused in Malaysia, right, and also quite focused in Japan. Quite focused in Malaysia and also quite focused in Asia, right? So that is the reason why for the last few years we have not been launching a new fund, right? But came to this year, we thought that since we have quite a good selection of Sharia compliance, right, a range of funds, right, that have generate quite a strong returns, right, over the last few years, it will be good that to actually put all of this fund, right, come under one PRS offering, right, so that our investor can actually have a better selections, right, that give you exposure into the global markets and also the regional market by having to invest in only one fund. So you don't need to go through like, I need to invest one PRS fund for global exposure, another PRS fund for Asia, another PRS fund, let's say for Malaysia, right? But through this allocator fund, we will give you exposure for everything. So just a very quick summary. I think like what I mentioned just now, retirement planning, right? I think it's something that we really have to look at it seriously, right? I would say that if today you're attending the talk and you're younger than me, right? I would say congratulations. I hope that my talk actually give you some idea, right? Or on how to actually approach your retirement planning, right? Or maybe it will give you some enlightening, right? To really make you seriously think about your retirement planning from today onwards, right? And when it comes to retirement, like I have mentioned just now, right? We really encourage you to have discipline, right? When you actually take on this whole retirement planning. Of course, right? I think a lot of us, when we earn, right, we want to spend, right? But I will really encourage you, right, to learn from our guru, Warren Buffett. He actually said this word: do not save what is left after spending, but spend what is left after saving, right? When I'm sharing this with you, it doesn't mean that I actually tell you not to spend, right? I think every one of us, when we work, we want to enjoy life, we want to spend, right? But make sure you do a proper planning, right? For all the financial goal that you want to achieve, right? Set a pool of fund for it. Like for retirement, right? You want to have retirement, you set a pool of fund for it. You want to buy a car, you set a pool of fund for it, right? You want to buy a house, or you're planning for your kids, right? Future education costs, set a pool of fund for it, right? And when you set this objective very, very clear, right? Make sure that we have a discipline to carry it through, right? So if you want to save 1,000 for retirement, make sure every month you put the 1,000 there, right? And if you want to save 500, right, let's say for your kids' education, right? every month, make sure you put your 500 there. And after you have set aside all the money that you're supposed to set aside, whatever that is left over there, right, how much you can spend, right, then I will say, please go and enjoy yourself and spend, right, and make sure you indulge in this. Right? So I think I would just want to end this whole presentations with some of the key data on the I-allocated funds that I have shared just now. I would say in terms of the key features is actually quite similar to all the PRS funds that you can actually find outside, right? In terms of the fees, in terms of like the features that the fund can actually do. But if you do want to know a bit more, if I said today is the first day, right, you actually come across PRS, you do want to know a little bit more about PRS, right? I would encourage you to actually go to the PPA website, right? You can just go to Google and search PRS PPA, right? It will actually come out and you click on the website, right? They actually have a very detailed sharing about what is retirement, right? What is PRS and what are the PRS offering that is available in the markets. And they also offer a very good, I would say, retirement calculators, right? That will help you to actually calculate the amounts that you need to set aside, the amount that you need to save, what kind of returns that you need to achieve, right? Feel free to actually utilize the website. I think it will help you a lot on your retirement planning. Okay, I think with this, I will end my sharing session here, right? Thank you very much for your patience. Thank you.
Okay, thank you, Jasmine, for your insightful presentation. We will start our Q&A session now. The first question, can you personally share how do you yourself prepare for retirement?
Okay, right. I think if you ask me, right, for myself, like I share with every one of you, I have a loose finger, right? I like it or not, I like shopping, right? And I like traveling. Okay. So that's why I always emphasize discipline is very important. So, and how I discipline myself. I can tell you that I discipline a lot, right, on myself through forced saving. So what kind of forced saving I do, right? I do the forced saving, like example, I buy property. I force myself to pay for installment of my property. That's something that I cannot miss, right? I force myself to sign up regular saving plan. Okay, so with me realizing or without me realizing, every month actually the money go into there. It's automatically transfer out from my account to there, right? For my investment. So that is another way that you can actually discipline yourself. And third, of course, invest in PRS, because whatever money that you actually put in there, right, you can't actually withdraw out, right? And I feel so glad that actually in Malaysia, like what I share with every one of you, we have EPF. I always emphasize that I can't emphasize enough how EPF actually help us. Can you imagine that if you don't have the discipline and yet you don't have EPF, right? And if you are the person that you actually like to spend, you like to indulge yourself, right? Actually, without you realizing, all your money will probably go to your spending. But just because today you have EPF, every month you are forced to actually put money there, right? And up to a certain age, when you look back, then you will see that, hey, actually, I have that amount of money there, right? Without me or with me realizing how big is that. Okay, so that is why I can't emphasize enough. I think I am a very strong keep repeating the same thing, right? Try to inculcate the discipline. Once you have made things as a routine, right, then things are actually not that difficult, right? Especially when you are young, please make sure that you plan it, right, when you are young. And if you just start working or you are going to start work, do make sure that when you draw your first salary, right, set aside additional amount on top of EPF, right, for your retirement purpose or for your whatever purpose, and make it as a monthly routine. Don't stop doing that. And I can tell you that it will help you a lot in terms of your planning. Okay. Can you hear me now? I think just now we are probably having some technical problem.
Yeah, so sorry about that, Jasmine. We can hear you now. You may share your screen again.
Okay. I think I probably will not share the screen again. That we will focus on like the relating
Q&A.
question. Yeah. What is your personal retirement plan? There's another question that's coming. What is my personal retirement plan? Any other than PRS, such as gold, foreign currency investment, Bitcoin, and ETC, right? I would say that I would encourage you to generally diversify your investment, right? Of course, I say PRS is very suitable for retirement planning. It is because of the way it is being structured, right? So if plan the discipline approach on you, right? So that you make sure you already set your mindset that whatever money you actually put there, right, is for your long-term retirement planning purpose, and you will not go and touch the money, right? But for all the other form of financial planning, all the other form of, I would say, saving or investment, you can actually use the other asset classes, right? For example, you can actually, if you have this discipline enough, you may not even have to invest in PRS, right? You can actually use any other unit trust fund that you have a flexibility for withdrawal, right? And of course, if you want some diversification, you can actually add gold, right? Come to Bitcoin, I guess I wouldn't want to comment so much on Bitcoin, right? I would just want to say that if you're investing in Bitcoin, you really have to know what you're investing in, right? And what kind of risk that you're actually taking, right? And in terms of risk reward return over time, whether you think that is justifiable for you to actually put your money into the asset class, right? I would say that if for myself, for long-term retirement planning, I would prefer some of the asset class that offer me a better Sharpe ratio, better risk-reward returns, and I would probably don't want to take myself into too speculative kind of asset class. Yeah. Right. Any PRS fund that mimic the S&P 500, right? At the moment, from RHB Asset Management, we don't really have this offering, right? That is mimic the S&P 500, right? But I do know like some other providers, right? They do have some fund, right? They have some exposure in through the ETF, right? That may give you some of the exposure into the S&P 500 index. But I'm not too sure exactly what that they are offering, right? Maybe you can actually go to the provider website to do some more detailed research. But if you want something that is actually mimic S&P 500, right, in not a unit trust fund, we do have a unit trust fund, right, that invests mainly in US, right, that give an exposure mainly in the S&P 500 underlying component stocks, right? Or if you want something that really give you a tracking that is very close to the S&P 500, I guess you can actually go to the stockbroking markets, right? And buy into the S&P 500 ETF. I think that is quite widely available, right? Especially in the foreign markets, that you can actually buy into some of these ETF. Yeah. How often I allocated fund declare dividends, right? The dividend policy will actually be incidental. So because this one, we actually focus more into, I would say, more growth oriented, right? Income is a supplement to it. Generally, if there's any income distribution, right, we will do it on an annual basis, right? But that will be on an incidental. Okay, I have a next questions. Right. If I have an EPF and now I wish to save in PRS, right, what should I do if I can't afford to save in both accounts, right? I think if you already have an EPF is mandatory, right? So the contribution to the EPF will definitely have to go into that, right? And if you really think that you can't afford to actually save much on the PRS, right? I would encourage you to start from a very small amount that you can afford. Now, what I mentioned just now, PRS, you can actually start right from as low as 100. Right? So if you can actually try to I would say force lah. I would say try to discipline yourself, right? To start from a small amount of 100. I think over time, it will still make a lot of difference. Yeah. So the tax relief is only up to, of 3,000 is only up to year 2025. If we still contribute to PRS after year 2025 and after 10 years, we want to withdraw from account 2, right? Is the withdrawal 8% penalty not worth it, right? At the moment, because of the tax incentive that is actually given, right? So that come with this 8% withdrawal penalty, right? I cannot speak on behalf of the administrators, right? Once this tax withdrawal, once this tax incentive, whether after 2025 will still be continue to be there, right? If they shall withdraw this, let's say the tax incentive and no longer to be there, right? Whether there will be any change, right, in terms of the withdrawal penalty or any other thing, I think that's the thing that I was not able to comment at this point in time, right? But I do believe that I think over time, as time come, right, that should be a more clear indications that is going to come from the administrator. So I would think that if you prepare to invest in PRS today, right, take it as what I mentioned just now. Whatever money, right, that you put in is really meant for a retirement purpose. You can actually, if you're not happy with, let's say, a specific one fund performance, right, you can actually switch fund, or you can even switch provider, right? So let's say today you invest in RHB asset management, right? After 1 year, you are not so happy, right? You want to, let's say, move your investment from RHB asset management to another provider funds, you can actually do so, but you can only do it once a year, right? And you can switch fund, you can switch provider, right? It's just that if you want to withdraw it out, right, from the you are not able to withdraw the 70, but the 30 you can withdraw subject to this 8% penalty. So when you put in the money here, right, I will seriously encourage you to actually think about it. Don't even think about the withdrawal. The withdrawal 8% shall only kick in for emergency basis, right? And you really need the money. Okay? And if it's for medical healthcare purpose, it is for you to buy a house for housing purpose, right? Actually, they allow withdrawal, right, without the 8% penalty. Yeah. Okay.
Hey, Jasmine, there's another question from YouTube, yeah?
Yeah.
A client is asking, when they reach the age at 45, the PRS growth fund will be sold off and reinvested in moderate fund directly, right? Or
Yep.
is it will remain in growth fund, but then the subsequent contribution will only be invested in a moderate fund?
No, it will the whole investment portions, right, will automatically switch from the growth allocation into moderate. Yeah. So it will be the whole amount that you had contributed previously also. I hope my answer is clear.
Yeah. Thank you.
Okay, then I have another question is that, will the foreign income tax rules as announced in budget 2022 impact RHB PRS fund with foreign exposure? I would say that for in all this income tax, right, on the foreign income, right, it will not only impact RHB asset management, or it will not only on the PRS fund. It basically will apply to any of the foreign income that we are remitting back, right? It generally depends on which type of fund, right? So I think for those funds that is more growth focused, like equity, that is more focused on capital gain one, right? So that may be less impacted, right? But if the funds are generally more income focused and we have income that we are receiving, right, from the foreign investment, so the amount of the foreign income that we are receiving, right, may be subject to tax. Yeah, we are still waiting for a more I would say clear guidance, right, coming from the industry as a whole, right? So, but as to what we aware now, right, according to the announcement, any of the income that is coming from the foreign source will be taxed, and that it actually apply for all the investment at this point in time, right? Unless there is any further announcement or any further adjustment on that. Yeah. right? Can you elaborate on the PRS or unit trust performance, right? Since the dividend is incidental, and how do we compare the PRS performance with EPF returns? I think EPF returns is in the way like quite a managed returns that is determined by EPF, right? So each year they were based on the overall investment return, and they will determine like how much they want to declare in terms of the distribution. But for unit trust and also for PRS, right? Generally, right, how we actually publish our asset allocations, right, is actually through our net asset value, right? So to look at your returns, there's actually two parts that you will have to take into consideration. One is the potential annual income that you are receiving, right, through the dividend distribution. Another part is actually through the gain, all right, or the price appreciation or the NAV value. Because for all the funds and including PRS, right, every day we will actually publish the NAV value. Like the returns that I mentioned to you just now, right? That some of the funds are generating like 3 years, 30%, 3 years, 40%. That typically actually come from the part, right, that's derived from the distributions and also coming from the price appreciations. In short, actually both work back the same one, because whenever we do the distributions, right, there will be a price adjustment that adjusts downward, right? But if we don't do the distributions, the part that we the income that we don't distribute out, right, will remain in the NAV value, right? So that will actually result into a higher NAV value. Okay, so either way, whether we have income or distribution or we don't have income distribution, the most important thing is that the underlying asset that we are investing in must generate return. And the return after net of all the necessary fees will actually be reflected on the NAV, will actually pass back to the investor. What if we do not want to auto-convert to moderate growth fund, but still want an aggressive equity fund after 45? Okay, then I will encourage that when you actually do the PRS contribution, you do not go for the default option, right? You select the non-default option and you determine yourself that you want your investment to be only on the growth fund. So when you reach the age of 45, it will not automatically move. If you don't select the default option, right, actually even no, if you deselect the default option, it will not automatically move. Yeah. And I have another questions here. I think I got a question from Mr. Sarah. That they mentioned RHB retirement series gold fund. I can't really get. I saw the amount there to be exact. I'm not too sure what is the questions you are trying to ask, Mr. Sarah. Maybe you can repost your questions, right? And who will assist with the switch of fund to different fund managers if currently I'm investing where the fund manager website, for example, switching from Bharu Mutual to RHB. You will have to go back, right, to the provider, right, to actually initial switch. I mean, if you come to RHB, we will be able to assist you on this as well. Yeah.
Jasmine, Mr. Saravanan, he did wrote in a question before. He invested 3,000 per year in 2013 and 2014 in RHB Growth Fund. The total amount now is less than 6,000, right, around, yeah. So could you, and he's seeking the performance of this RHB Retirement Series Growth Fund. Yeah,
sure. Right. So for the retirement growth fund, right, to be fair, I think the performance since the launch until now, right, it has not been actually up to the expectation over the last few years, right? It was largely affected by some of the holdings we have in the portfolio, because if you look at the allocation for the growth fund, right, it is primarily focused very much on Malaysia, right? When we incepted the fund, and during that point in time, we do have quite a fair bit of I would say allocation into some more towards the mid cap and more towards the growth sectors, right? And unfortunately, there's a few of the stock selection in that portfolio that was not performing up to the expectation, and it has dragged down the overall performance of the funds. Now, nevertheless, I think we have started to see some improvement in the growth fund performance from last year onward. Right, so last year we actually saw the fund have delivered quite a decent performance of like 8%, but it's still, I do have to agree with Mr. Shaban that it's still lagging as compared to the other growth funds that we can find in the markets, right? And we have done some asset allocation tweak to allow the fund to have a more flexible asset allocations that give some exposure into the regional markets, right? And we do believe that I think with this tweak that is happening over time, right, it should help on the overall fund performance for the growth fund. Yeah.
Okay, I guess thank you, Jasmine. I guess we have finished answer all the questions. So if you have further questions, feel free to send us an email at investhelp.my@fundsupermart.com. Link is at the chat box. A replay of tonight's session will be available right after this. Head over to our YouTube page at FSMOne Malaysia to catch this replay. And once again, thank you very much, Jasmine, for joining us today. And thank you everyone for attending tonight's sessions. Good night.
Right, thank you everyone. Thanks for your time. Right, good night everyone.
Thank you, Jasmine.
Thank you, Jasmine. Thank you, Jason.
So we will stay here for another 10 seconds just for all the attendees to jot down our emails. We will end the session in 10 seconds.